What's good, YouTube? This your boy Aristotle Investments, and we back with another special episode. This is going to be the top 5 stocks under $50, and I'm going to explain why with technicals and fundamentals. So the technicals are the charts, and fundamentals we're going to hop into the data. You're going to learn a little bit about data today. So before I do, all I ask you guys to do is leave me a like and a comment. All right, and if you're not subscribed yet, please subscribe. Now we're gonna hop right into it in 3, 2, 1. Let's get it. So the first stock is Lyft. Now let me explain why. Earnings are forecast to grow 31% per year, became profitable this year. So if you look at this zero line, they just became profitable. Cash flow is positive, so free cash flow, that means no money they have to invest into their future. Just became, so look at this, from 2023 to 2024 to 2025, they only have a 1.5% profit margin, but the revenue is steadily growing. Okay, so revenue, earnings, and cash flow. Earnings is how you are profitable, and then revenue and cash flow, right? All right, so going to the technicals, study the price charts. So I bought a little bit in this area, and now I'm up, so don't get me wrong. But I personally think it's going to fill this gap one day. So you're still early, and that gap is $31. So in my opinion, this stock could double. Now, full disclaimer, this is for people who have patience. This isn't me saying this is going to be the stock that blows up tomorrow. This is over time, okay? So if you guys notice, I am a long-term trader. Look how long it took for me to hold this. I was in since April and March, right? And it is August of 2025. So I do believe by summer 2026 or 27, this thing is going to get here, and that is nearly a 100% return. One of my favorite stocks, under $50, undervalued right now, could take off based on its valuation, and technicals look good as well. It blows past this line of resistance, it could go. The next stock we want to look at is SMCI, which is a semiconductor stock. Earnings are forecast to grow 28% per year, 4.8 profit margin, which is the only negative because I think it was 7% last year. But the earnings are definitely, the revenue, my fault, is definitely growing, and the earnings are good, and the cash flow is positive and growing as well. So this is good as far as what I'm seeing. Has a good trend in my opinion. It is undervalued and could possibly keep going. Okay, so let's go look at the chart. So looking at technicals, we're still on this trend line. 1, 2, 3 touches of support. Now, NVIDIA just had earnings, so who knows what could possibly take place there, but SMCI could possibly go. All right, so looking at SMCI's chart, we have a gap to fill right here. We're on this third touch of support. 1, 2, 3, trading above the 200 MA highs, so it does have the potential to get back to 120. So in my eyes, one day it will return to highs. Now you can either do leaps or long term, but remember, this is for people who's thinking long. This isn't for the people who like, hey, I got in and it's down tomorrow. Like, this is long, patient people. But yes, this is 2 on my list. The number 3 one on my list is Inphase, ENPH. Earnings are forecast to grow 12%. Earnings grew by 34%, roughly 35% over the past year. 11.8% profit margin, let's just say 12%. At first, had great revenue growth and is bouncing back. I personally believe this is a bounce back. The earnings are slightly coming up, and the cash flow doesn't really matter as much as the earnings and the revenue growth. Let's go look at the chart. All right, so first I just want to talk about who is Inphase. For one, let's go do this real quick. Scroll all the way down so you guys kind of know who they are. Inphase Energy. Before we keep going within the chart, let me explain who Inphase is. Inphase Energy is a global energy technology company which engages in the business of design, development, manufacturing, selling home energy solutions that manages energy generations, energy storage, control, communications, intelligent programs. It operates through the following geographic segments: the United States and Netherlands and others. The company was found. Okay, cool. Now, If we go look at the technicals, we can see that it is significantly down from its high of $300. So in my personal opinion, much undervalued, if that makes sense. What I like to see is something that, for one, had a great high to get to, like Hood. We got in this a long time ago. If you guys remember, we've been in Hood since down here easily. I've made a lot of money on Hood, and I remember I told people it's going to return to highs, and it did. Well past highs is at 102 now, and you could have got in the 20s, but hey, like I said, that's what I like about Inphase. That's what I like about every stock that we're going to show. We want to see a significant, I really want to focus on stocks that have the potential to rebound and that are profitable and are forecasted to have growth from earnings every year. I don't want to see somebody decline, because then that means they can't bounce back. The fourth stock on our list is Hims, which is pretty much an e-com medical type of company that will ship medical products to you. Earnings are forecast to grow 14% per year. Earnings grew by 969.5% over the past year. Nearly a 10% profit margin. Revenue is skyrocketing. Earnings is doing great. Free cash flow doesn't really matter as much, but it could always come back, but it's still profitable. That's all that matters, right? So it looks great. It looks like it could continue on this trend of earnings growth and revenue growth. Now, taking a look at Hims chart, looks pretty good. Another pullback. It's crazy because we got out, we hit it big on this thing. We got in right here and rode this whole trend up right here. Mad I missed this one right here. It's at $44 right now. Crazy way. It looks like it's bear flagging. It looks like it's bear flagging, so it could do another drop if it doesn't bounce off this trend line. Good pin bar here, good little run up here, but now it's trying to bear flag. Still believe that still undervalued, could keep going. And last but not least, CMG. Earnings are forecast to grow 13% per year. Earnings have already grown 30% per year over the past 5 years. They have a 13% profit margin and steady growth, steady cash flow, steady, right? Chipotle. So definitely, I still see growth. It's like a McDonald's. You get what I'm saying? It's a company that's going to continue to go up and up and up. Let's go look at the chart. So Chipotle down 40% from all-time highs were June 2024. It's about right here. $42 after a stock split. So that's pretty good. Dropped nicely after a stock split. That's a healthy and good stock split. $42 is definitely a great buy-in, and the cheaper it gets to $38, $30, always average in. But yes, I like Chipotle. I like their balance sheet. I like their earnings growth. Steady company, blue chip company. Definitely buy in. All right, guys. So those are my top 5 stocks. Let me know what you think. Now, one thing I do want to say is I usually do leaps, long-term shares. Whenever I'm buying into companies like this, I like to buy myself time, at least 2 to 3 years out, because again, you never know what can happen. You may have to average in. We're at all-time highs right now in the stock market as of August 28th. So, you guys tap in if you want to join my Discord, where I call all my leap plays, or I'll call the exact entries of anything that I get into. So you guys tap in. I'll pin the link in the comments. God bless you guys. And also, disclaimer, do your own research. These are just my opinions based on my research of how I do things and the prerequisites that I choose stocks. So God bless you guys, and see you guys for the next video.